Hey everyone, it's Eddie from Rising Block, and in this video we're going to talk about how to handle slippage and market fees in our arbitrage bot. If you didn't watch my last tutorial, go ahead and pause this video and go to my channel and watch that one first, because the code here will be based off the previous one. So what is slippage? Slippage is the difference between the expected price of the trade and the price the trade actually executed at. So this happens when the market moves while you're placing your order. So in order to account for this and to make it a higher probability that our trade actually executes, we need to add a percentage to our buy orders and we need to subtract a percentage from our sell orders. So for example, if we set a slippage percentage of 1% and we wanted to buy a coin at $100, we would actually send the order in at $101. Vice versa for selling. If we want to sell a coin at $100, according to our bot, we would actually execute the trade at $99. This just sort of increases the likelihood of our trade going through. So let's talk about this in code. So let's try to complete this get a trusted prices method. So we're taking in the price and the slippage percentage. So our adjusted sell price is equal to the price multiplied by 1 minus that slippage percentage. And then our adjusted buy price is equal to the price multiplied by 1 plus that slippage percentage. So we can return both of these. That's it. It's a pretty simple concept. Next, we're going to talk about market fees. So basically, when you make a trade on the market's going to charge you a small fee that is usually about 0.1 to 0.25%. So those fees really add up over time, and for each trade, since the margins can be really slim with an arbitrage strategy, you got to make sure each trade is profitable after you include fees that you have to pay to the market. So let's again take a look at this in code. Catalyst is actually built off a library called CCXT. I'll link that in my blog post. It's an open source library that connects a bunch of markets together. So to actually get the fee of the market that you're trading at, you just do market.api.fees trading, and we'll do taker fees. You can multiply that by the price. And yeah, that's it. It's actually really easy to do in Catalyst. I'm going to round this to 5 decimal places. Yeah. So our last method that we need to fill out is this profitable after fees? Considering the sell price, the buy price, the market you're selling at, the market you're buying at. So what we want to do is basically account for the fees in this method and return true if the trade's still going to be profitable and return false if the trade's not going to be profitable. Let's get the sell fee first. Sell fee is get fee, sell market, but sell price. Our buy fee is equal to buy market, buy price. Sweet, we got both our fees here. So let's talk about our expected profit. That's going to be our sell price minus our buy price minus both fees. So sell fee and buy fee. And if expected profit is greater than 0, we're going to return true. I'm just gonna add some logging here for us so we can see what's happening when it's trading. If it's not above 0, then we'll return false and we're not gonna execute the trade. So the full source code will be on risingblock.com. I'll also link it down below. But you can see our algorithms just changed a little bit from the previous tutorial. So the previous tutorial had if the price of one market is greater than the other. Now we're going to incorporate fees. All right, so let's look at one of these trades here. So let's look at this one right here. So we have a trade that executed on December 10th, 2017 at 3 a.m. We have Bitfinex trading at 14,611 and Poloniex trading at 13,168. So we're actually going to sell Bitfinex at a little bit of a lower price than it's trading at. So that's our adjusted price to account for slippage. So you can see we're actually going to try to sell it at 14,172. And then for Poloniex, we're actually going to buy it at a little bit of a higher price to account for slippage. So we're going to try to place the buy order at 13,514. And our total fees are 62. So our expected profit here is 595. I hope this video has helped you guys out. If you guys have any questions, leave it down below, or you can email me, eddie@risingblock.com. I'm trying to make these videos shorter and more to the point. And if you want all the details of the implementation, you can sort of read it online. See you next time.